The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1. Of course, tomorrow I will not be here because I'll be in the middle of my 8.5-hour all-day webinar based on the Chapman Wave methodology. Really what I'm looking at are just to teach and go through and review some of the visually easy things to put together with the whole umbrella of Chapman Wave. The notation of the peaks, yeah, that's important, but it's really the patterns. Look at this. Peak D is where we always like to go, the fourth highest peak. I always talk about that. And of course, I can't find the chart right now. I'll do it if I can. What we're looking for is identify the lowest low bar. No, there it is. Identify the lowest low bar, and then you count each successively higher peak. From the lowest low bar, you go uppercase A, B, C, D, 4 higher peaks. At the fourth highest peak, other things can happen. Doesn't have to, but that's where you got to be careful. Number one. Number two is it's very often it's just a simple technique of going to the A, going to the B, going to the C, the D, and placing your order and then putting your stop in relation to what your tolerance for risk is. It's very important. But sometimes it starts and then it hangs around before it really breaks to the upside. That's called the restart. I'll teach that. That's one of the things. There are two areas where you need patience. Sometimes when you have the restart, you have to be there because if it doesn't break the left side low, at some point, that's going to go to a buy signal to a buy mode. That's very important. And the other thing is that when it gets to D, you need patience to see. Within 3 bars, there's a break to the upside. What does that mean? It could be so positive that it's actually a brand new buy mode that's going to take you to another 4 or 5 higher peaks. I mean, that is incredible information. Or it could fail, and that's what you got to be looking at. So within that context, let's just go through the numbers, and as we go through the numbers, I'll show you. And there is still time to sign up. Why? Because although you're going to get my CD, a $240 value thrown in, as well as a month of my opening call newsletter, that's $128. Plus, if you're using Tiger Dollars, you get that discount. I will be sending you the CD overseas. It might take a little while, but I'll be sending you wherever it is, the CD. Some of you already got it. But what's really important is that the whole thing is archived. You can go through it as many times as you want. You can go through it. I say, this is exactly what I want to look at on slide 23, whatever it is in my CD book, introducing the Chapman Wave methodology. It is extremely thorough. Here we are. Look, what do I expect? 4 peaks. You went to a peak D back in November at 25.94.50 in the E-mini. Pulled back quite sharply to 25.55. Started a brand new 1, 2, 3, 4, 5 waves to the upside in the Chapman Wave, but it's a peak D, and that takes you to 26.65.25. I will talk a little bit about my Chapman Wave 5s. That's really it's not about that at all. I even though it's over 2 years and it's really been working very well, there are just too many times where I have to wait for the Chapman Wave methodology to kick in before I can confirm that that's a Chapman Wave 5. So until I've got that, until there's a formula that is just not necessarily foolproof, but it is rigorous, and it happens, although this has happened often enough, there are just too many times where I have to say, you know what, for me, it's very easy, but for you, it might be difficult. So I'll just talk about it in passing. We'll get to it later on. Maybe in a few months' time, I'll be ready to officially inaugurate that. I like a lot of proof, a lot of evidence. So in the meantime, it did make that 5. You did get that pullback to the 9-period moving average. Now there's a very strong bounce, 9 points up in the E-mini at 26.38. I would suggest that if it gets to 26.47, 26.51, I'll have to rethink about whether this is going to be a failure pattern or whether we just chop around here all the way into December so that the market holds very well going to the first week of January. Then I think you've got to be very careful. All right, here we go. So the E-mini up 9, the parameters to watch on a very short-term basis. Let me show you the 10-minute chart with the Chapman wave notation right there. This is in leg. I'm calling it a D, but I used a phantom peak, so let's call it a C or a D for now. But above 26.43, 26.45, that's very positive. I'm thinking there maybe could be a little bit of a stall here. Watch the downside. 26 is at 26.38. Watch 26.35. A close on any 10-minute bar. 2 closes under 26.35 says, okay, that's the balance all done for the day. But so far, this is very nice rebound action. Now let's get to the nitty-gritties. The Dow up 100 at 24,241. So you went to a peak D in the Chapman wave, pulls back from 24,534. I'd say to subscribers, so far this is not bearish activity. The MACD is still good. The stochastic is not good. We have started a position, a short position. I'm going to make this a real tight stop. I don't think there's any reason to mess around here because I'm not seeing bearish action. I need to hear news that's perceived by the market as being potential bad news, and the market reacts negatively. I want to see the futures down at the opening and the close, at least double digit, minus 10, minus 11 in the S&P futures, and the Dow must be down about 70 points. And bad news in the VIX index, which is now only at 10.23, it needs to be in the 1150s or higher. And then I'm going to say, okay, now I think we can keep going down. But until then, it's chop, chop, chop. So we'll see what happens. I'll get to questions, just a ton of questions coming in. Let me get to the S&P. Parameters are 26 at 26.38, up 9. The 9-period moving average support, I would say 26.27, but any pullback today below 26.33 would be a big negative. I'm not sure what would do it, but that's what would be very negative. MACD is flattening out, saying I'm losing some of my power, and the stochastic is down at 69. Unbalanced volumes trying to rebound from the lowest level it's been at for a long time. Maybe that's a positive. We'll see. Qs. The QQQ should be having a rebound after being really smacked for quite a while. Since it made that top at 156.69, let me move this away. I meant to show the leg D in the 120-minute chart of the E-mini, and we'll get to that. On the 28th of November, 156.69 peak D, pulls back to about the 152 level. Now it's rallying to 154.27, up 77 cents. There's that trend line. It says a break, a decisive break, a close on a daily basis above 154.70 would say, hey, I can tackle that very ugly candle of the 4th of December, and that was a high around about 155. I'll tell you right now what it was, 155.63. Now let's go to something very important, the IWM. I will get to talk about Bitcoin, etc., because that's going to be very important. The IWM is having a good day, up 0.91%. At 151.60, up 139. Wow, it's got a long way to get to the previous high. And it's rare for an all-time high in the daily chart to fail significantly at a peak C. Will it get back to 155.42 for leg D, penny above the previous high? That's going to take a little while. And that would say, hey, maybe there's more strength in the overall market than one would think, at least I would think. But the parameters to watch, the close below 149.50 says up, IWM started to fail, and a push into the 152.70 says, hey, this is very good action. Wow, we want to get to gold, copper, dollar, euro. I'll be right back. Crude oil, I'll be right back. Basil Chapman, Dow's up 97.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank bank is a member FDIC and equal housing lender.
Basil Chapman will be hosting a full-day Master Trader class Friday, December 8th from 9 a.m. until 4:30 p.m. This live 7.5-hour online class will teach you the complete concepts of Basil's Chapman Wave trading methodology, along with a variety of indicators and charting patterns that Basil uses on a daily basis, including the concept of higher peaks and lower troughs, the importance of the peak D, buy and sell modes, sustaining rallies and declines, MACD, stochastic, moving averages, on-balance volume, and much more. Everyone that attends will also receive Basil's CD book introducing the Chapman Wave methodology, a $249 value, along with 1 month of his daily trading newsletter, The Opening Call, a $128 value. Basil will be using live charts where and when possible in the webinar to show the concepts of his trading methodology, which works on all time frames. For all the details and to reserve your spot today, visit the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone, we're back. So the IWM is going to be a big clue as to whether there's a perception that the tax bill is going to favor the small caps. A whole bunch of things are going on. It had a much deeper pullback than I would expect at a peak C, and I can't make any reasoned analysis to say there could be an alternative count. I can't say that this is a peak C1, C2. There is no double top. It went to a C and plop, it came back down. Not only that, there is some strength because yesterday it went into that wick. This is really not a Chapman Wave Roman candle, but I was saying that it has the characteristic of the wick, that long wick, and it held there below 151 for quite a while, and then it didn't test the low that it should have done from Friday, 148.75. So this is showing some internal strength. The MACD has made a huge turn down. It hasn't just trying to cross negative now, but it's been saved by this upturn. Stochastic spur. I'm going to be watching the IWM. We have no position there. Now, what I am going to say is I want to go to the questions, but first I want to go this. Look, gold is down $11. That's not such a big deal. What is a big deal is it's been doing that except for one green candle since it made that peak F Chapman Wave high with a Chapman Wave Roman candle. Let me put that down here for the Chapman Wave Roman candle. What is this? This is at GC peak F. That'll be used tomorrow because it's a part of the techniques that I'll be teaching. So look, the MACD plummets, the stochastic plummets, the horrible chart on the weekly. So Kevin asked a question, said, the dollar is, let me get that exact, will I be able to find? Yeah, well. So it's really a good question because it says, as you see, UUP, which is what we own, from the low that was made, the 70-week low on the dollar, we bought that, is up against weekly 9 EMA, yep, and the 200 period EMA, yep, where the GDX is bouncing, bouncing at, let me just see here, because the 200 period moving average in gold, where did it go? There it is. Here's the gold. So this is the 200 period. Let me just double check here. Yeah, this is the, okay, got it. So I just wanted to double check. Didn't want to talk about things as if they weren't. The 200 period, which is orange, and the 200 period moving average, exponential moving average, simple moving average, which is this kind of bluish color here, We're way under that, and everything's crossed negative. And I'm thinking that we've broken the support. It's kind of empty. I have to get a lot of technical indications to say that gold could turn into a pretty serious, not a bounce, but a pretty serious reversal candidate. I don't see it yet. And if you look at the dollar, look at this. The dollar is not great. I mean, look at what it's done. Big deal. The last move, it went from the 91s all the way to the 95s. Then it pulls back and comes to the 92.50 area. I mean, that's not good action for the latest. Let me just do this here. I wanted to show you in real time. So it makes an arch formation, peak C1, C2, something else I'll be teaching tomorrow, comes down to a trough E, tries to rally, makes an arch formation, does a good successful retest as the MACD and stochastic are turning up. These candles are good, but really the dollar should be at 94.50, 94.70. So I'm looking at this as if this is potentially, yes, a turnaround for a cup formation, but it's moved a little too much to the right. So tomorrow's going to be very important. Any stalling and it's just too much to the right. I want to see acceleration in price. That's as important as the tech. When the technicals are rallying like this, if you said to me, I was looking at something at 92.50 and the technicals have just rallied very strongly, where do I think it is based on the technicals? I say if it was down and this right here at this level was 92.50, here we should be at 94.70 or something. It doesn't mean the dollar. I mean, just whatever it is I'm looking at. And look, we're only at 93.65. So I'm going to be looking at that. There is a divergence. If you look at the EUR-USD, the euro-dollar currency pair, EUR-USD, look at this. Made a peak C and then sort of failed. But it's a peak C in the weekly chart. That's an A that is part of the H formation. So this C is not, I should make it a gray C because it's not at all-time highs or even pretty much major recent highs. So this can fail. So let's make it simple. At 1.17, the euro-dollar currency pair down a little bit, a push above this high right here, anytime in the next 4 days above the high of December 5th, above 1.1847, shouldn't be a big deal. But if it's able to do that, that's very positive. But a pullback under this candle low, no, not even that candle, this candle low of the 22nd, 1.173, would say 171 is the next test of support. Very important period. That's why I've been saying that this tomorrow is, last week was important. This week we've had some follow through on all the technicals we've been looking at in the opening call. Next week is confirmation. We'll see. And USD JPY should be rallying because the dollar's rallying. And it is, I haven't looked at it. Yep, it's rallying, but it needs to get until USD JPY, the yen, goes above 113.08, the high of the 4th. If it does that and it does that strongly, that's going to be the best sign to say dollar's going to rally further and the yen, dollar-yen currency pair is going to run further. Let's look at crude oil. Then I'll get to those questions. Some of them I've answered already. Crude oil trying to bounce. It's a peak E in the weekly, testing 55.79 this week. Today, in fact, the 9-period moving average support. The way I'm looking at it, I think it's at a huge move. It could take a little bit of a breather. I don't think it's going to collapse based on the weekly chart, but I do think it's kind of stuck in a range between 58.10, maybe 57.70, and 55.50 better hold. Otherwise, it goes lower. Okay, let's go to the next thing here. High-grade copper. Boy, I think I'm almost done. These guys. High-grade copper, yeah, it's at the bottom of the range. It's an arch formation, peak E in the weekly. I would hesitate to say it's going to do anything other than just chop around. And platinum, I was asked about. Let's get a plat, PL. This is continuous. Whoa, very ugly. And this is testing the left side low. We've seen too many of these commodities. And I had a great question in the den. I'll get to in a second. 895.40 was the low in the platinum the week of the 14th of July. 895.40. Today's low is 895.50. We have 11 cents to go before breaking that low. I think it's going to do that. Not a good looking chart. Question in the den, and this was really good. And the question was, is it normal to have stocks at all-time highs and commodities at new lows? And I'm going to say just trying to, I haven't gone to the chart. I will try to find a chart. Maybe I'll do it on Monday. I won't be here tomorrow. The history is that I remember that after the 1980 gold top, silver top, the Hunt Brothers top, Granville top, I do remember that the metals went down a lot, and then you got further gains, and then you got the 1982-83 huge recession. The market plummeted. So I'll go back, but I have seen determined moves in commodities one way and the stock market the other way. It is actually unusual to go for a lengthy period where they're both going in the same direction, but periodically you can go for at least 2-3 months with commodities and the market going. But I need to check to verify those statements. There are a lot of questions. I'll come back to them. The question about a statement.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, so a couple of questions came in. I'll go through them right now. The one was, what did she say? Sarah wants to AK Steel, X, United Steel, and Vail. Where are they in the Chapman Wave count? So the steel ETF is actually acting quite nicely, but not great. It made a peak in the weekly. It bumped up against the 200-period moving average in the monthly chart. You can see right here. Went to a D and then pulled back. The last weekly peak D way back in May had a huge pullback from the 45 area down to the 35 area. That's big. Then it rallies up to 45 again, double tops and comes back down. So I like the candle we're looking at right now. So the question is AKS. Well, we have AKS as a long. I did a whole study on it. In fact, it's part of my webinar tomorrow. Look at this. There was a left side, right side price time match. I chose a particular candle to use this to try to see if we could even get close to filling the gap. We were at 466. It's trading right now at 528. It hit 533. It's about a 15% gain. But now it's at 528. And it's in leg D. And it didn't get to my Chapman Wave inside track resistance zone, but it's acting beautifully with the MACD. The stochastic's good at 78%, not great. On balance, volume is rallying. So yeah, this is saying to me there is maybe it's news related, something with the you know, the tariffs and all that. I have no idea, but it's a nice leg A, and this is what I've been saying for a while, that I don't like that candle, that weekly candle in AKS, AK Steel, from the 3rd of November with a high of 609. It goes down to 405, $2 in a $6 stock, a 33% decline. Not good. So to fill that, I want to see Friday, I want to see a close above the halfway point, which would say you want to see a close somewhere above 523. That's not good enough for me. 523, I want to see a close tomorrow, Friday, and I'm not sure how I can do. I think it's used up a lot of energy, somewhere in the 525 to 531 area. To me, that would be fantastic, because that'll really improve the weekly chart above a 9-period moving average. So, and we have another stock which was made a peak B, which we bought, I thought, perfectly. It pulled back just a tad more than we wanted, got stopped out for like a 1% loss, and we just missed it by a few cents yesterday. I had a good day. Today we're in it. It hasn't made that leg C, but it's acting very well so far. We'll see if those steel stocks can keep the market going. I've seen the home builders, I've seen the autos, and I've seen steel stocks at various times where the market's actually had a big pullback, hold very well. They're almost in their own world sometimes. I don't know if this is the case here. We'll see. So AK Steel, that's the answer there. Next thing's answered. IYT, the transportation index. IYT, this is the iShares Transportation Average ETF at 186.52, up $1.88. Went to a peak D with a very strong MACD, very good stochastic. This is nice action after a little. I'm going to be talking about my just 3 or 4 candles that to me are the most important. The most of them are doji candles. And look at this little doji candle, gave a little reversal signal. I'm going to be watching that. So make it real simple. If tomorrow there's another strong day and the IYT is able to get to 188.20, I think it'll try to test the previous high, which was an all-time high at peak D. The weekly chart is making a doji, long-legged doji, leg D. This is really important for the transportation, leg E in the monthly chart. So I make the parameters clear. In the next, by Wednesday, this coming Wednesday, if it closes underneath 183.81, the low of yesterday, it's going to test 182s, the 9-period moving average. If it closes above, even yesterday, the candle of 3 days ago, 187.41, that's a nice sign. So that's IYT. Next question is, Oh, nice question. Nice try, GT. After peak D, if a trend continues, go with the alternative count. It really depends, which is what I'm going to be discussing tomorrow in detail, because most people who do the Chapman Wave know that it's in the very beginning and at peak D. Those are the 2 places where you need that new information. And that new information says that if it is, what can I do? What can I show you? Let's go to something that's, we could do this. We could do the IYT right now. See, the IYT, if that breaks to a new high at 189.69, 1 penny above the peak D, I have no choice just to call it an E, not an alternate count, nothing. I'd even go EF, even give it a chance of a G because of the MACD. So it depends on the formulation of D. How you get to D is the most important thing. I see it introduced in the Chapman Wave methodology. There's a technique that I developed. It costs a lot of money to find these things out because it's hit or miss. There's no other way of doing it. And I developed a technique called the Chapman Wave Instant Restart. It's a whole, I couldn't even take now to do it. It requires articulation, but I'll just make it simple. If within 3 bars, after a very short pullback from D, going to the next leg up, if it's within 3 bars and it closes above D, that's a good sign that says you can now go with an alternate count, E/A. Think E first, not A. And then it'll unfold as you move along. Just make it as simple as that. Next thing I've got here is the RUT. I did the RUT. DG, that DG is, Dollar General, huge move. It's gone. Peak A, B, C, D. This is a leg E. It's a leg E in the weekly. This is outstanding action, but I think it's overbought. Double top, oh my goodness. I can't do that now. I'd like to do it maybe Monday. I'll have a technical Friday. Look, remind me again, 96.88, the high in July of 2016, and 96.60. Missed it by 96.60, missed it by 9 cents, making a new high, or 8 cents a double top. There's a U formation. You know, it's worth talking about. Let me make a note here. DG, we can talk about that tomorrow. U monthly. Wow, nice. Thank you for that. We'll do it next week. We'll do a little more on that. Okay, XLF. This sounds like a lightning round. No, it's a slowdown. There's your peak D. This is the 3rd bar after that D. If yesterday's bar, number 2, was as it was, and today there wasn't a new low, but instead it just spiraled higher and went above, by the end of the day, went above 28.20. I would have to say with the MACD very strong and the stochastic at 85%, consider it E/A. You can now introduce the other one. I said not with the transports, but with XLF, the S&P Select Financial Spider Fund. Yes, there you can consider that you can be having an alternate count, but not at the moment. If after this it goes to, takes, let's say, Friday and then Monday. Let's just say Monday, fabulous day, and it goes above 28.20. I'm going to say to you, consider it E. In other words, you want to be as conservative as possible. You can only use the alternate count under certain conditions. Next question. So we did that. I think I've covered everybody. There was one from earlier on. I'm just going to try to find it because it was a good question. And I love these questions because it puts me on the spot and also allows me to articulate the methodology. Macy's. Macy's trading right now. Yes, this is a good one. Look, there's peak D. It went to an alternate count very quickly. There was one pullback, and then yesterday was a new high. So this is what I do. I say immediately, okay, leg E. And then what I do is I invariably circle this, and that's my clue to say, you have an instance restart potential. What's next? And I'll discuss it. I'll discuss that for just a few seconds when we get back. I'm calling it.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
We're back. So a couple of things. I was asked about SGMA. I never heard of this. This is Sigmatron International. It's not Sigmatron. Pass me your Sigmatron. I don't know what it does, but it sounds like it should be on the Big Bang Theory. And what we're looking at here at $10 is up a penny. I've got an account. You said this answers the question that was asked by GT with after Peak D. I feel very comfortable having an alternate count here in the weekly chart, G/A. No, I'm sorry, G/C, that should be. G/C, and there are a whole bunch of reasons for it, but the most important reason is that the MACD is held above, the green line is held above the red line all the way through what would have been an instant restart, and that usually says you're going to go to a G. You might just sneak to a D, but it's pretty much done to the upside until it takes a consolidation. So the question was, buy, sell, or hold, what would you do? I would hold if you've been long for a long time. I wouldn't even think right now of doing anything. Huge single leg A in the monthly chart, but look at the way it wormed its way. I have a stock just like this as a good example of the worm theory. This is the one that walks the branch. You just see this narrow move to the upside. This is a little bit wider than narrow, but it just keeps holding it and walking to the upside. The daily is saying, I'm getting a little tired now. I could have one more pop, but I would say it's at $10. So if you nibbled here because you're a longer term holder, I would say it's biotech. I figured that. Okay, biotech. I would start a little position here. It's held beautifully. It hasn't been involved in the biotech, the morass action of the IBB. And I'm going to say to you, hold it here. So if you want to start a small position because you're a longer term buy and hold, because this kind of pattern doesn't crash to the downside. There are so many support levels that it sort of rolls over and makes a big arch formation. It won't be doing that if it goes above 1022 by Tuesday or Wednesday next week. Wrong stock. SGMO. Oh, SGMA. What a lot of work for SGMA, and you're on SGMO. SGMO. Oh, the monthly chart looks the same. You know what? It's almost the same thing. It's at 16.90 at 55 cents, and this is Sangoma Therapeutics, I guess. If you're holding it, just keep holding it. But I would say there's a little difference here because of the arch formation that became a cup formation in the weekly chart and the potential doji. Here I'm going to say to you, if you're holding it, keep holding it. 14 to 13.50 is really good support in a long-term position. Shorter term, if it closes under 15.50, be prepared it's going to go down. Hope that answers the question. Now, let's just do this. A lot of people have been asking me about this. I discussed it. I showed it to subscribers a long time ago. We have not been in it. I missed what would have been a great entry, and I'm not sure how long I would have kept it, but it's GBTC. This is the Bitcoin Investment Trust. Now, everywhere you go, it's being spoken about. This is the craze. This is the craze, the same sort of craze. In the 1920s, towards the very end, 28, 29, they started pools. People couldn't afford the prices of the stocks. So what they bought were pools, and they were put together by the JP Morgans, etc. And they would put together a whole bunch of stuff, and you would just buy it as if it was like an index fund, so that you had a part of it. You could say, yeah, I own GE, I own GM, but in fact, you only own like a tenth or whatever it is. We are very much like that period now, and I've been waiting to say, what is it? Because I'm waiting for the same thing to happen in music, the kind of Benny Goodman of the late 1920s. We haven't got anything like that in music. We will be getting it at some point. I don't know when. That's part of this coda phase, and so is the Bitcoin. And look, GBTC, Bitcoin hit nearly 17,000. Bitcoin fund is down, it's up 102, down from the intraday high, hasn't gone above the peak D 1905.55. I'm going to be using this. I'm now finding that this is the only benchmark that I can use if I'm not looking at the real thing, the GBTC, but I think it's starting to, at least for me, get a lot of information. That doesn't mean to say between the hours of 4 o'clock and 9:30 the next morning, the actual core Bitcoin could have 30% moves up and 40% moves down. So sneeze coming. Excuse me. So GBTC, watching this D very closely. The MACD is strong. Stochastics okay at 81%, but making lower highs. Hey, it's going to be fun to watch, not to trade right now. We will be in this at some point, subscribers. I needed time. I just needed a good few months to see what happens. Okay. Now I want to do a couple of things. I said I would look at, the VIX index. So this is going to be very interesting. The VIX trading right now down 72 cents at 10.30. I'm suspecting that this VIX is going to be in action at some point in the next month. When I say in action, I say next 6 weeks. I mean that there's a chance that the VIX index is going to start a rally, and that rally is going to see something that takes us at least right there. You see that 13 level, the middle of that wick, the long wick at 14.38 that was made in late November? Well, if we start to see a trade that goes for an entire week, where the low of that week is no less than 12.20, no, the low is 12.50, and it starts to trade above 13, and then 13.50, and then 14.60 all that week. That'll be the first, and there has to be bad news, and there is bad news. That'll be the first time in a long time that you start to see double-digit down in the E-minis every day. Rallies start to fail and go to the low of the day by the end of the day, and there's just a very negative connotation to everything. The news, the VIX rallying, and the markets going down. We haven't seen that for more than an hour or two, and I think that we will see that come within the next 6 weeks. Question I had, will I look at race, which is a Ferrari? And this is very interesting because Ferrari has been going down since its all-time high of 121.14 in a rare peak G on the 1st of November. I've been monitoring this for a long time. We were going to short, then we decided not to short. It went to a rare G in the monthly. Also a very quick Chapman wave 5. That 5 at peak F was great. It was a double 5 because of different ways I calculate that. And then it went to a third 5, all within the space of just a few months in the weekly chart. That says to me that big money is not buying Ferraris the way you would expect at all-time highs. And that's a tip-off for me to say that we are getting closer and closer to at least a good 8%, maybe a 12% correction in the market. Doesn't give you time. It just says, yeah, there's a good chance that this is a good hint. So, Basil, since no one else has questions, can we please look at AVH? I have a lot of things to go through. I want to do AVH very quickly. AVH is Aviance Holdings, looking really good. Peak A, B, C, D, E. It's in leg E in the weekly chart, in the daily chart. It looks very good at 1816. The weekly chart has really improved a lot, and this is a pattern that says rising highs and rising lows. If it's able to get to the 8.40s in the next week and a half without hitting 7.60, that's really bullish. A good eye, AVH.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, so don't forget, you got Steve coming up, great programming with Dave White as well, just fabulous shows. Then, of course, the one and only Tom O'Brien comes on at 4 o'clock, 3 o'clock, and then you've got Andy Hecht after Tom O'Brien. So think about that. Now, let's just do this. Here's the 10-minute chart. We'll be going through some of these charts tomorrow in my webinar. There's still time. I will send you the CD. You'll get the CD later, but I'm going to be going through the CD tomorrow. So you won't be missing out on anything. So please, if you want to sign up, and it will be archived, you're going to be able to go through the archive 8.5 hours. We will be taking breaks, and you'll be able to ask me any question at any time. That's what I'm there for. Look, this particular pattern we spoke about just now, this cluster formation starting to form a bit of a barrier, a push into the 26,650 area, 26,650 in the E-mini would be very positive. A pullback today between 2630, below 2635 would be a poor action. So just short-term poor action. Okay, so that's what I'm going to be doing. I want to just go through this here. my CD. Nope, I want to just go through this. This is my right here. So tomorrow at 8:30 we start. You can sign up. There's still time to sign up. You get fantastic bonuses. You get my CD. You get my newsletter. We've had some nice calls, and hopefully some people have already paid for their courses from the webinar we had 2 weeks ago, looking at those steel stocks, etc. So here we go. This is going to be. It's actually 9 o'clock to 4:30. I'll be there at 8:30. So this is what we're going to be looking at. We're going to be looking at patterns. We're going to be looking at the couple V-shaped pattern, the arch or inverted. We're going to be, of course, counting the letters. I'm going to teach how to just make a straight line for resistance or support, how you can get those number of bars from the left to the right with the Chapman wave plumb line. There are just so many things. How do you use the MACD and the stochastic? It's really important that you use them to identify trends and to be able to get that turn to the upside, to be able to get that push to the leg B or C or D. So those are all things very comprehensive, very thorough. I answer all your questions, and I'll be there for the next 30 days. You can just ask me anything you want as you review the information. Now, the GDX, it was not gold, it was GDX that Kevin wanted about. GDX is trying to hold at 2140. We'll watch this closely. Hey, have a great one. I'll be back on Monday. Otherwise, I'll be back with Tom later today. Have a terrific day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software